Welcome to the Principles Experience. This channel is designed to give you financial content in the areas of business, finance, and investing, while bringing you stories of the mindset of entrepreneurs and their tips on building a business. Sit back and learn on how you can develop your financial wisdom and create a blueprint for financial freedom. What's going on, world? Welcome to another edition of the Principles Experience. My name is Kevin Jenkins. I thank you so much for tuning in to my YouTube channel. This is the 11th episode, and what I want to discuss in this episode is 4 strategies of diversification. I want to discuss some ways of how you can use diversification within your investment portfolio. Now, when it comes to diversification, all it simply is you're looking at ways of how you can spread your money into different asset classes while being able to reduce your risk and being able to increase your gains. Now, before I move forward, I do want to emphasize, and I want to say a quick disclaimer. My content is strictly for informational and educational purposes only. Please consult with a financial advisor or a brokerage firm before making an investment decision. Also, all of the different diversification strategies that I give you, I want you all to take the time to do your research after this episode, and also make sure that you're taking the time to look at your risk tolerance and just make sure that you're making sure that you're comfortable with making a specific investment decision. So let's dive now into what I have outlined for you all. So one way of how you can invest an index and mutual fund is you can put it in what's called a growth fund. Now, what a growth fund is simply a fund that invests in securities that are in the equity markets of companies that have grown over the years. So companies like Apple, Microsoft, companies like that have grown substantially over the years. These type of companies is what you would see in a growth fund. And specifically with a growth fund, the purpose of it is so you can be able to accumulate capital gains. Now, what capital gains is simply the difference between the price of when you bought the fund compared to when you sell the position or when you close the position. So let's say you buy a stock or you buy an index fund at $115 per share and you sell it at $120 per share. Your capital gains on that transaction is going to be $500 because it moved up 5 points, and I'm simply timesing the 5 by 100. Now, I did want to give you all some quick little some great growth funds that I had seen online, and some growth funds that I seen that were great, that have grown over the last 10 years is the Vanguard Mega Cap Growth ETF. The ticker for it is MGK. And these fund assets are invested primarily in the tech industry. And the tech industry, that's going to be here forever. If you look at what we use with social media, what we're using for working from home, the different video conferencing softwares that we're using, and also just technology that we use on a day-to-day basis when it comes to apps that we have on our phone, you can't go wrong with investing in the tech industry. So I think that this type of fund is a great one to look at. Another good one is the Schwab US Large Cap Growth ETF. The ticker is SCHG. The next strategy I want to give you all is investing in growth and income funds. Now, these type of funds are invested primarily in the blue chip equities that provide income with dividends, and they have growth potential. Some examples of blue chip equities, you have IBM, Procter & Gamble, Boeing, McDonald's. Those are just some of them. There's so many more. So make sure that you take the time to do the research and look at what blue chip funds you can put in your portfolio. And some great ones that I found, some great growth and income, was the T. Rowe Price Blue Chip Growth Fund. The ticker for that one is TRBCX. And also you have the SBDR S&P 500 ETF, which is the ticker for that is SPY, SPY. And it's another great one for you to do your research on. And the third strategy I want to give you all is you can invest in income funds with your portfolio. And these type of funds invest in fixed income securities such as preferred stocks and bonds for the current income provided. Now, with income funds, it may only specialize in one type of fixed income security. And the type of funds that you usually see is U.S. government security funds. You have municipal bonds, you have preferred stock, you have corporate bonds, and you have money market security funds. Now, I'm going to give you a quick overview of what each of those funds are, so you kind of have an idea of what it is when you're doing research. Now, U.S. government securities is debt issued from the government, and this could come in the form of long-term notes, long-term bonds or short-term notes. Municipal bonds is simply debt that's issued of state and local governments, territories, and political subdivisions, such as special districts, agencies, or authorities. Preferred stock is similar to a bond. It does have its differences, but a preferred stock gives the holder of the stock a fixed dividend where the payment takes over the priority of a common stock dividend. Corporate bond is when corporations issue debt in order to be able to raise capital within their company. So corporations, they'll issue long-term bonds, intermediate notes, or short-term notes known as commercial paper. And lastly, money market securities are treasury bills or negotiable certificate of deposits, which are CDs. And I know with brokerage firms like Fidelity, TD Ameritrade, you have the option to invest in money market instruments. Now, the fourth and last strategy that I wanted to go over is you can invest your portfolio in a specialized fund, which is also known as a sector fund. And with this fund, it invests in a specific industry or a geographic area. So with any index or mutual fund, they all have different companies that are invested into different sectors, such as technology, financials, healthcare, industrials, consumer, discretionary. These are all different sectors that you can invest an index fund in. And it's a great way for you to be able to spread your money in a multiple of different positions. You know, I'd rather invest in 25 different positions rather than investing in one position. So it's definitely great to look at these different strategies. And I thank you all for taking the time to look at these 4 strategies of how you can diversify your income. If you all could please like, subscribe, and share this video if it stood out to you and it helped you and it was of any value. If you could please share this message, I would greatly appreciate it. I'm also going to put my link tree in the show notes so you can be able to listen to this video on all audio platforms. And I'm also going to drop a couple links in the show notes of some great large blend and also large growth mutual funds, so you can look at some different ways of how you can diversify your portfolio. So with all that being said, I thank you all for tuning in to the Principles Experience, and I hope you all enjoy the rest of your week. Take care.